This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Starting a new week, we are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. And, as we come back into a new week, it feels like we've kind of put a lot of stuff behind us, right? I mean, there's G20 which has happened, there's the US Open which has happened, there's the India-Pakistan match.
Yeah.
So
a lot of events outside the market. And there's Jawan, which had an opening weekend as well. No.
Nigel watched it,
I
right?
did watch it.
How was it?
I mean, I personally enjoyed it. I
Is it more because you're a Shah Rukh Khan fan?
No, not really. Yeah, because I was clearly disappointed with Pathan, but Jawan lived up for me.
Really?
And I went to Gaiety Galaxy to watch it. So you have those, the audience that goes in there, they're doing their dance, they're whistling. Oh, man.
I think that would have been fun, right?
That would be fun. And after years, I've gone and seen a film at Gaiety Galaxy in Bandra. So excellent. I enjoyed it personally. And the box office, well, that's evidence, right?
It speaks for itself.
Absolutely.
Yeah. Okay.
I did the next best thing. Guess what I watched? Not the full thing, but I watched half of the movie. Bazigar. I was too tired. I couldn't
Going
step
back
out.
into the past?
Well,
Are we having 1990s again?
yeah, I mean, I told you about Junoon, right?
Yeah.
91, 92 movie. I mean, it's like amazing times, the 90s.
But the markets are also quite Jawan, right? I mean, given that it's almost at 20,000 and we're just, less than 200 points away from there.
I mean, we're aiming sights for 20,000 now, and I think it's coming. So let's just quickly actually run you through exactly that in terms of what you need to know as we start another trading session here this morning. So you got, the first thing, which is the broader markets, which are starting to exhibit characteristics which are kind of reminiscent of periods of a little bit of euphoria, right? So we've got the pace of gains in the broader market, which have picked up sharply. I made this point after market hours on Friday as well, and that would hold true this morning as well. From weekly gains of 2%, and I'm talking about not stock, but index gains, mid-cap and small caps, we were doing 2% every week. We've done 4% for the last 2 weeks in a row, right? So the pace of gains itself is accelerating quite a bit. So, for example, both the mid-cap index and the small-cap indices have gained 8% in 2 weeks flat. Now, that is quite something by any yardstick. So, to add to that point, if you take a look at if you go even below, right, mid-cap, small-caps, micro-caps, in the last 24 weeks, the Nifty micro-cap index has had one lower week, 1 out of 24. That kind of tells you what's happening in the broader market space, really. I'll come to Nifty in just a bit, but just a quick, a cursory look at Wall Street, but not very much really because you had a flattish kind of day on Friday, so mildly higher. The S&P was up about 0.14%. The two problem points, which is oil prices and the dollar index, are still high. But as we said on Friday, on Thursday, there is a thick coating of Teflon here as far as the Indian market is concerned. And so far, I mean, it's not really bothered us, right? I mean, oil is now near 91. Dollar index is still above the 105 odd mark. I mean, just around there. So we'll need to see how much more. By the way, at least the sell side, brokers, etc., are starting to acknowledge the fact that oil is at 90 and, stress test sensitivity in terms of the current account deficit and things like that. But at least it's starting to come into the conversation here on a macro market level. Now, let's just come to levels here. The Nifty momentum continued. Remember, on Thursday, we took out 19,700. Friday, we closed above 19,800. So the momentum, and 19,700 was a crucial, critical resistance. Once that got taken out, the momentum picked up on the upside. We ended 0.5% higher, above 19,800. There's nothing between now and all-time highs, which is 19,992. And of course, then the 20,000 odd level or so. By the way, there is visibility beyond 20,000. Actually, 20,300 or so is a completion level, which the market should target in this leg up. We'll see. Bank Nifty crossed the 61.8% retracement of the August to same retracement, right, which one we've been putting out in the Nifty as well. But it could not close above it. That level is 45,312. So, one would still watch, which is 150 points away. Because the gains fizzled out in the last 60 minutes. But above 45,312 on the Nifty Bank as well, I would say, you start to at least have the possibility of a move to all-time highs, new highs. On the way down, 44,658 can be used as a support, which is the 38% retracement of this entire fall, July to August fall, which we've been highlighting. The implied open will come up on your screen, but, as we've found out, actually, it was different. Friday was different because we started in a certain way and then actually gains picked up, unlike the previous couple of days when the implied open was lower, the start was lower, and then things picked up. So maybe, we are getting to that point where some of this stuff is going to start getting chased as well. So that's what we are looking at. 19,922 on the GIFT Nifty is the implied open this morning. Sonia.
Oh, absolutely. And it is mission 20,000, right, on the Nifty that the market is looking at. And we're not too far away from that. It's just a matter of time. We were making this point last week as well as to how, despite all the bad news thrown at the market has built on to its gains. It's clearly been a buy on dips market through it all, and that's the strategy even today. Nifty is less than 200 points from that 52-week high. We've been gaining for 6 straight sessions now. It's a 2-month high. But even if you look at, the flow situation, there is plenty to be bullish about, especially on the FI side. Now, FI selling has come down substantially in the last 3 days. On Friday, of course, there was just 200 crores of selling. But in the last 3 days, if you look at it, the selling has dwindled from 3,200 crores on September 6th to about 700 crores and now 200 crores. So FI selling has reduced, which is very positive. DI buying has also picked up quite a bit. So overall, in the month of September so far, we've seen about 6,000 crores of buying from DIIs. They bought about 1150 crores in the cash markets on Friday as well. Now, there are a lot of data points to watch out for, and it's crucial in the run-up to the US Fed event on the 19th and 20th of September. You have a lot of data points that will come through. Tomorrow, you have the Apple launch, so all eyes will be on that. The iPhone 15 could be launched tomorrow, so all eyes will be on that. But then there's the US CPI data, there's retail sales, there's PPI, there's the University of Michigan Consumer Sentiment Survey. So all of these data points will be crucial in the run-up to the US Fed policy. In terms of macro data points, you also have in the Indian markets, the August CPI, July IIP and August WPI data that comes through. The only headwind for our market, which has not dampened spirits just yet, is that Brent crude continues to remain at 9-month highs. It crossed $90 a barrel. There are a lot of supply pressures as well. So, that's the only thing on the sidelines that the market has not taken cognizance to just yet. But I'm also watching out for the Bank Nifty very closely because the next leg of the run-up is led by the banks. So banks have started to come back in a big way, whether it's HDFC Bank, ICICI Bank. So that perhaps could be where the action lies.
Well, indeed, Sonia, and the Nifty Bank for the last 2 sessions has outperformed the Nifty. Yes. That's not happened, in a very long time. So you just look at the last 2 days, that's when the Nifty Bank has come back to the party. Now, in Friday's trading session, 2 factors played out. One, the net institutional number was a positive number. All of the past week, it was a negative number. Maybe there is some large trades in there, but that turned positive. Point number one. Point number two is you had both the Nifty and the Nifty Bank, they went up, and you had open interest that was lower, telling you there was some clear signs of some short covering that played out. And the FI as well, they added mild long positions and they covered some shorts. That's what takes long positioning now to around 58%. And as we've been mentioning, we haven't seen this sort of long positioning for the last couple of months. On the option side, well, it was pretty much even-stevens. If you're looking at the index options on the buy side, or even if you're looking at the writing side, around 3 lakh contracts were written on both sides out there. Which brings us to the strikes. 19,800 put, 19,700 put, both of them, between them, they added close to around 60 lakh shares odd. And that 19,800 put, the premium's around 75 rupees. So you deduct 75 from around that 19,800 odd level. And your near-term, stop loss comes in at around that 19,725 approximately. That's the first level of support. If that breaks, then you're looking a little bit deeper at around the 50 DMA. Similar is the case with the Nifty Bank, which has been outperforming for just 2 sessions, which is very, very good news because that's what the one that could lead from here on. And that's what's happened in the last 2 sessions. You had big openers build up at around the 45,000 put, which, by the way, was a bit of a resistance level. And now, in fact, given that the premium was on an average around 300 rupees over there, for those writers, well, the support comes in at around 44,700 odd. That will be an important support level. On the way, you have the 50 DMA, which it was, flirting with for the last few sessions, but managed to conquer that level. GIFT Nifty suggests a green start. I think you'll get a bit of an intraday dip. You look to get in. You need to stay long on the index. Mission 2000, well, that's the one that the bulls will be looking at. And maybe in the next few days, Sonia, we hit it.
You mean 20,000?
20,000, sorry. What did I say?
2,000.
20,000, sorry. 20,000 is the one that we're looking at.
Okay, well, it's a big move, right? The market, I mean, back to that psychological level. So lots to watch out for today. Very quickly, let's kickstart the show. We kickstart with a lot of opinion that has come through, both on the equities as well as on the bond market. Let me tell you what's lined up in the first half hour. Updates from the market across the globe. Abhilash Narayan, Standard Chartered Bank, will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30 a.m., we'll do a fundamental stock analysis with Prakash Diwan. On the equities front, we start off with a view coming in from Sanjay Mukim of JP Morgan, who says that higher oil, lower rainfall are a few macro concerns on the margin. He says while the Indian economy should be able to withstand a $90 per barrel oil print, continued crude increases combined with weaker rainfall could start to weigh on the local equity markets. He says they've already argued for a shift from growth to value, and he adds that tightening macro conditions support a reduction in beta in Indian equity portfolios as well.
Well, Sunil Kaul of Goldman Sachs thinks that Indian equities could stay resilient this time despite recent rally in oil given manageable current account, which are supported by strong services exports, remittances, robust forex reserves and resilient growth backdrop, he says, across sectors. Defensives like staples and IT in India have outperformed during past oil rallies, while property, industrials, transportation have fared the worst.
Let's also get a quick macro call from Indranil Sengupta of CLSA. He says the El Nino has pulled the seasonal rainfall deficit down to 89% of the average drought level. He says this cannot but hurt the autumn kharif crop and push back rural recovery. He adds troubles will mount if the summer 2024 Rabi crop is also impacted. Indranil says a trigger will likely be the northern rivers that water the wheat belt, slipping to say 90% of average from 98% now. He sees August inflation at 7% tomorrow versus 7.4% in July.
Okay, well, let's get you some money market views as well. On the rupee, we have B. Prasanna of ICICI Bank saying that the dollar favored by exceptionalism of US against other major economies remained on strong footing despite signs of slowdown. Asian currencies led by Chinese yuan were under pressure from weak economic recovery in China and policy divergence with the US. The rupee faced headwinds from rising crude and strong dollar environment, but is protected by the Reserve Bank of India intervention and remained range-bound around $83 a barrel, 83 rupees to a dollar. He expects the rupee to trade between 82.8 to 83.4 to a dollar range, with RBI smoothing the volatility.
All right, and on the bonds, B. Prasanna says global yields inched higher post-consolidation as incoming economy data is increasingly pointing towards a soft landing scenario. He says local yields had additional pressure from rising commodity prices and tight systemic liquidity. Overall, he expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.2%.
Okay, well, we have Abhilash Narayan, Senior Investment Strategist, Group Wealth Management at Standard Chartered, now joining us with some thoughts on what he sees going on in the market and up ahead. Thanks very much, Abhilash. Good to have you with us here. Thank you for your time. The starting to get into the conversation is where oil is at right now, Abhilash. At least the economy, the macro guys are starting to talk about it. I've not heard very much on it from, the market folk. What's your sense? I mean, oil at 1991 is high. And the fact that it's come up some 30% in the last month and a half is quite large. What's your sense in terms of the impact on markets from here?
Yeah, absolutely. I mean, obviously, the OPEC plus cuts that we saw last week were expected. I think what was the surprise was the duration of cuts. They extended it till December. Now, I think from our perspective, we should probably have seen the last OPEC cut, because if you look at the past OPEC oil production cut cycles, they generally involve 2 or 3 substantial cuts. And this time around, we've already seen 3 cuts. So, it seems that production cuts are behind us, and we should see a consolidation in oil prices here on. If I look at WTI, $88 per barrel has been a key resistance for that. Obviously, from an economic standpoint, for India, it does matter because it raises the likelihood of further current account deficit and is likely to pressure the rupee. But if you think about it from a global perspective, it also increases the risk of a deeper recession, because higher oil prices will mean that Fed, ECB, and other central banks will probably be forced to keep rates higher for longer, and that could mean that when the economy slows down, the risk of a deeper recession has increased at the margin.
Okay, got that. Abhilash, hi, good morning. Thanks a lot for joining in. I wanted your thoughts on several macro issues to do with the Indian, economy as well. But before that, in general, how are you feeling about the big event upon us, which is the US Fed meeting on the 19th and 20th of September? Do you think this could be perhaps the start of the end of the rate hiking cycle by the US?
Yeah, possibly. So, from our perspective, we don't think the Fed will hike rates any further. Obviously, a lot depends on the US CPI data, which is scheduled to come out on Wednesday. But assuming we don't get a massive upside surprise, what we're likely to get from the Fed is a bit more hawkish tone, saying that they remain open to doing further rate hikes if it's required, but they won't hike any further, in our opinion. I think what would be crucial for markets is, the revised Fed projections around U.S. economic growth, and also the long-term neutral rate from the Fed's perspective, because there has been a lot of debate in the markets that with U.S. potentially entering structurally higher inflation, the long-term neutral estimate for Fed in terms of interest rates may be revised higher. So if that happens, markets could react negatively to that. But on the flip side, if Fed lowers its forecast or maintains its forecast for rates going forward, then that could be viewed as reducing the risk of a deep recession, and we could see equity markets globally rally based on that.
Hi, Vilash. Good morning. I recall a couple of months ago when you joined on the show, you had made this point that you're positive on the Indian markets, but even more positive on the broader markets here in India. That's played out quite well. Given where we stand right now, would you be a little bit cautious, or would you continue to remain constructive on the Indian markets?
Well, it depends on the time horizon. So on a 1 to 3 month horizon, we see increased risks of choppy range-bound trading, and that's down to a few key reasons. So first of all, obviously, we are edging towards the all-time high for Nifty. So usually these levels act as a resistance, a technical resistance for the market to break higher. So that's one. Secondly, I think with food inflation, being elevated, with oil prices rising higher, obviously markets have pushed back the expectation of RBI rate cuts, and that could be a headwind for the market. And lastly, if we look at the foreign institutional flow, so back then, a couple of months back, I'd highlighted that we are seeing increased foreign money flowing into Indian markets. Over the past few weeks, past month, that inflows that has stopped, and that's partly because of the fact that on a relative basis, the strong rally has meant that Indian markets are back again in that expensive territory relative to some of its peers. So yeah, a bit choppy in the near term, but on the 12 to 24 month horizon, we are still positive on Indian equities. In fact, a month or so back, we did publish a structural report on why we are bullish on Indian equity and Indian economy on a 5 to 7 year horizon. So long-term positive, but we use any pullbacks as buy on dips opportunity.
Abhilash, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC TV18 as always. Thanks indeed. Well, there is Abhilash of Stancy with the perspective on markets from here. We'll take a very quick commercial break here. Our list of top stocks to watch out for with our research team coming up in just a bit from now.
Welcome back. Hope you're having a good morning so far. Looks like the bulls are going to have a good day for sure, given that, we're on our way to hit that 20,000 mark on the Nifty. And it's been some time coming. We've been ambling around this 19,300 to 19,500 mark. So breaking out of that range is something that the street will definitely like. Vivek is joining in first up to give us a couple of stocks that he has on his radar. IRB and IRB Invit is what he's looking at. Vivek, morning.
Well, good morning. Both the IRB twins will remain in focus. So the company has given an update as far as the month of August and the toll collections for both of the companies are concerned. Now, IRB, the August toll collection has come in at around 417 crore, which is up 24% on a year-on-year basis. However, it is important to note that in this particular month, there is an additional project which is there, and that is the toll collection for Hyderabad Outer Ring Road that is also added to the collection. Now, talking about IRB Invit, again, steady set of numbers over here. August toll collection is at 81 crore, which is up over 11.5% on a year-on-year basis.
Okay, thanks a lot for that. I'm also watching out for CAMS this morning. The stock, as we know, it's India's largest mutual fund transfer agency. So they provide a lot of mutual fund services, statements, etc. They had an analyst meet over the weekend and there were a lot of positive takeaways that came in from there. So I'm going with green on the stock. The management is very confident on both the growth and the margin outlook for the business. They are market leaders currently and they say that this market leadership continues. They've guided for a 14% revenue growth and a 45% EBITDA margin in the medium term. And they expect the mutual fund AUMs itself to grow 15% over the next few years. We've seen all those headlines about how, demat accounts have hit 10 crores now and there's so much growth in mutual fund AUMs. That will benefit them. They've reiterated their guidance to increase the share of non-mutual fund based revenues to over 20% in the medium term. So they're looking to diversify further. They say that operational efficiencies and enhanced productivity gains should drive the EBITDA margin expansion to 45%. And they also see a lot of opportunities in AIF segment because there are now rising compliance needs. So that's where they step in. So hence, I'm going with green over there.
All right, Sonia. Well, I'm also looking at Shyam Metallics because over the weekend they went ahead and they announced an OFS for a total of around 6.3%. That's around 1.6 crore shares. So the initial offering will be around 5%. And then, in fact, they have an option to sell another 1.2% also. That's how you get the total number of around 6.3%. The shares will be offered at a discount of close to around 12% in comparison to the close price that we saw on Friday. Some part of the street was anticipating maybe a discount of 5 to 6%. So when it's at around 12%, I think that, the street will lap this up. The OFS for investors, well, both the dates should come up. Non-retail can apply today and retail can apply from tomorrow onwards. Remember, the promoter holding is at around 88%. So this helps them bring down their holding as well towards that 70% odd mark. It will come down to the early 80s. What the company has been saying for the last many quarters is that they're looking at adding value-added steel and they're also expanding in various verticals, which come up for you on the screen. Given their expansion plans, well, the stock will be in focus. It will open up in the red, but we'll have to see the response to the OFS. But I think going by the feedback that we've seen over the last few days, this one could get lapped up.
Okay, Nigel, thanks very much for that. That's Shyam Metallics for you. Now, let's go across to Vivek. He's got details on SJVN. He's standing by. Vivek, morning.
Well, that's right. So SJVN is the other stock that will be in focus. So the company's subsidiary, which is into renewable services, green energy services, so SJVN Green Energy has gone ahead and signed a PPA, power purchase agreement with Bakra Beel's management board. Now, this is for the supply of solar power, and this particular project is expected to be commissioned by August 2024. This particular project was secured by the company through the competitive open bidding mechanism, and the tariff for this particular project has come to around 2.63 per unit. It's a material development as far as the company is concerned because it's the start of signing as well as commissioning of a certain PPA.
Okay, so a new solar project is what SJVN's arm will develop. But Vivek, you're also tracking JSW Energy this morning. Why is that?
Well, that's right. So the Economic Times has reported that TPG, Tokyo Electric Power Company, and Brookfield are actually in advanced talks with JSW Energy, and this is for buying a stake in the company's subsidiary, which is known as JSW Neo, which actually houses all of the renewable energy and green hydrogen projects that the company would be coming up with. Remember, JSW Neo Energy is a subsidiary, and what the company also does is it stores and produces green hydrogen. We reached out to JSW Energy. At this point of time, the only response we got was no comments, but we will wait and watch out for, in case there is any development on the same.
Well, thanks a lot, Vivek, for joining and giving us that quick update. Let's hop across to Ekta. She's tracking a couple of more companies, namely Strides and VRR Logistics. Morning, Ekta.
Morning. Well, I'll start with Strides. They have received US FDA approval for a drug which is used for kidney conditions, and it is an oral suspension drug. They've already received approval, or they've tied up for the tablet version. So they will be launching both of these versions in the next 2 odd years. So the tablet will be commercialized by Q1 FY25. Oral suspension will be introduced immediately. $212 million in terms of a total market size. They say that it is going to be manufactured at their Bangalore plant, is a complex generic, limited competition, and hence it should probably be positive. They have also indicated they are going to be launching 60 new products over the next 3 years when it comes to the US markets. VRL Logistics, promoters sold around 35 lakh shares at 681 rupees per share. Promoter stake will now fall to around 60 odd %. SBI MF has picked up stake in terms of that large deal that took place. They bought around 2.2% stake in this large trade that took place, and hence their holding has now risen.
All right, take that. Thanks a lot for that. Well, let's go across to Surbi. She's tracking a couple of Adani Group stocks. She's also looking at the port stocks this morning. Surbi, good morning.
Good morning. So the first one is Adani Enterprise. Now, Adani Global Singapore has signed a joint venture agreement with Singapore-based company Kowa Holdings. Now, this joint venture is for the sales and marketing of green ammonia and green hydrogen. The next is some port and railway stocks will be on my radar because the Prime Minister announced a launch of rail corridor between India, West Asia and Europe. Now, this corridor is going to provide a reliable and a cost-effective ship-to-rail transit network between Asia, Middle East and Europe. So, you can expect some port and railway stocks to be, in the green today on the back of some positive sentiment. But we don't have any details on this so far. But it's still a positive for some of these companies.
Okay, thanks a lot for that. So those are a couple of stocks. Here's a quick recap in case you missed out on any stocks with positive news flow. There's IRB Infra, IRB Invit, CAMS, SJVN, JSW Energy, Strides Pharma, Adani Enterprises, and some of these railway stocks. Well, stocks with negative news flow, there's Shah Metallics and VRL Logistics.
Okay, all right. Well, those are the top stocks that we're looking at. But let's get you some brokerage notes as well that we've got earlier today. Ekta has gone through a few and she's joining us to give us an update on that. Ekta?
Well, I'll start with the Apollo Hospitals. UBS has written on it. They have a buy rating, target price of 6050, which is 6,050. Industry data indicates occupancy trend is improving sequentially. They expect the healthcare losses to reduce Q on Q on a steady basis. Morgan Stanley is written on State Bank of India. They have an equal weight rating and a target price of 670. They've reiterated their guidance of 12 to 14% loan growth for FY24. Goldman Sachs has written on HDFC Bank, buy rating, target price of 2051. With the ICRR withdrawal, they assess the impact would be to the tune of around 400 crores or $48 million. Citi has a neutral rating on Infosys with a target price of 1430. They say that the demand environment is not worsening anymore. Macquarie has written on HCL Tech. They have an outperform rating and a target price of 1520. The management is confident of the ability to meet the guidance of 6 to 8% growth on a constant currency basis. Equirus has written on Zomato. They've initiated with a long rating, target price of 135. They say it's a solid play on India's rapidly expanding food delivery service.
Okay, thanks a lot for that, Ekta. That's Equirus' view on Zomato. Let's do one thing. Let's also talk about the potential headwind for the markets, which hasn't hit the market just yet. But perhaps the street is taking note of that, is the move in Brent crude. And Manisha Gupta is here to give us an update on all that happened in the last 48 hours. Manisha, hi, good morning.
Morning. Thank you for that, Sonia. Well, last week we saw crude prices gain up by 2% because of the lower supplies that we saw come in from US and the Russia and Saudi Arabia output cut as well. But this week is going to be quite important. To begin with, we have started with the strength in US dollar index, which is holding at 6-month highs. You also have the IEA and the OPEC reports coming in this week, and that will keep the markets jittery. But apart from that also, you have the inflation numbers coming in from US, from UK, China, and India. Inflation numbers coming tomorrow as well, and the street will keep an eye on that. The European Central Bank interest rate decision also happens in this week, and the markets are now working with almost a 93% chance that the US Fed will not hike interest rates in the month of September, and that seems to be supporting commodities as well.
All right, Manisha, thank you very much for that. We'll come back to you for more later, but we'll take a break at this point in time. Prakash Diwan will join in on the other side for a quick fundamental stock check. We'll also connect, by the way, with Rajesh Baheti of Crosseys Capital Services and Tejas Kode of Fires, which is a broker, to talk about all the drama which happened in the sensex options on Friday. So that's coming up as well. Stay tuned All of that in just a bit.
Welcome back. Here tuned into Bazaar Morning Call. You're on CNBC-TV18. As we were telling you earlier, the gift nifty is suggesting that we're likely to see further green. A 40-point uptick is what we're working with, so we get closer to around the 20,000 odd mark. But plenty of stocks to discuss. Prakash Divan joins us to help us out with just that. Hi, Prakash. Good morning. Thanks so much for joining in. Prakash, I wanted to ask you about Shah Metallics. There's an OFS that they've announced, and I think the street was anticipating that. You have been tracking, a couple of these stocks closely, I think Godavari Power and Ispat and the likes. Your view on Shah Metallics, if you look at it on a trailing basis, the stock appears expensive. But they've got expansion plans, and that's why brokerages believe that EBITDA number will surge from around 1,500 crores, maybe to 4,000 crores odd. How would you view the stock?
Good morning, Nigel. So absolutely, you said it. There is more future than the past in this case. However, my concern is with everybody, especially the way the cycle is taken off, and we've spoken about how Tata Steel at 105 looks so attractive, and all the way moving to 130 plus, JSW, all of them. It's going to be now the turn of some of the secondary players, the smaller size players, the specialty steel players. A lot of that will start kind of getting into play. But in that space, if you really ask me, I would still chase value for the simple reason that Shah Metallics trailing PE tells you that it is expensive, and if there's some risk, issues with execution, it starts kind of getting very vulnerable. So, the risk reward is, to my understanding, not very favorable. And remember, whenever promoters are exiting between them and somebody buying, it's anybody's guess on who's smarter. It's very simple. They know their business well, and if they were to be looking at an OFS, there must be some reason why they need that liquidity at this point in time of these valuations. In that space, Nigel, very clearly, we've tracked Godavari and all of these. One name that stands out is Sunflag. I mean, I think, we've discussed this in the past. You've covered it so well. Ever since, there's been some resolution on that family dispute, it has been in a little bit of a momentum of sorts, but it still isn't where it should be in terms of the kind of cash it sits on, the holding that it has in some of the other companies like Lloyd's, and also there's much more available in that space, in that size. I would not be very excited about putting money into this OFS at this point.
Okay, you won't be excited. Got it. The other pocket that I wanted your thoughts on, Prakash, and hi, good morning. Thanks for joining in, is banks, right? In the last 2-3 days, banks have started to come back in a big way. And you have this whole rejig that's happening on the 15th as well, where that post the HDFC Bank, HDFC merger, there'll be perhaps some more allocation towards HDFC Bank. Your thoughts on how to approach banks now? What would you buy, if at all?
So, good morning, Sonia. So that's an interesting space, and what's kind of making it even more interesting as a special opportunities, stages. HDFC Limited and HDFC Bank coming together, seeing this whole expansion of the balance sheet, makes HDFC Bank extremely hungry for PSL, priority sector loans, right? And when that happens, which they don't have, because HDFC Limited comes with a huge balance sheet, but really didn't have any of those in that significant thing. So the bank will have to kind of shore up that component. And that means a lot of the smaller banks will see a lot of loans changing hands. A lot of the loan book will change hands. And that is going to be extremely positive for some of these smaller banks to kind of get into a very clear churn where they could kind of, start doing revenues, which is far better, top line growth, which is far better. Of course, margins might not accrue as well as organic growth would. But my sense is I would focus on the smaller banks. The smallest bank out of the lot, and which we speak about a lot in terms of a turnaround, is Bank of Maharashtra. Undoubtedly, I think it's turned around so decisively in the last quarter. All the metrics have improved so much. And this overhang where the government put in money and, the equity kind of got diluted too heavily is kind of behind itself now. So, if you had to cherry pick some of these smaller banks, and of course, Federal it's not small, but Federal will continue to grow because of the kind of focus it has. But my sense is if you had to look at some of the smaller banks, be a bit selective. Don't go for too many of them. I would believe Bank of Maharashtra probably makes that grade. It has risen, of course, from the late 20s to almost 40. But there still is, in the long term, there still is some value, which you'll start discovering from here on.
Oh.
Okay. By the way, Prakash, anything out of the G20 over the weekend which caught your eye from a market point of view? Some are talking about this, Middle East rail corridor.
Yes.
Which perhaps opens up opportunities. In what way? Because it's such a large project. If it starts to come together, it could be big. But it gives people ideas, especially with what's been happening in that space. On Friday, also IRFC, RVNL, RITES, all these were going up sharply. Your thoughts?
Oh, absolutely, Prashant. I even in the morning when Surbi was. She made a very nice statement. She said, we don't have details in terms of how this is going to pan out, but it's going to be positive for these stocks. So that's the sentiment. There is something which will accrue to most of these players, and it's a huge ecosystem that gets impacted favorably, right? We're not only talking about the sheer magnitude of what has been spoken about, but the complexity and the kind of ability of Indian companies to participate at every point in that value chain. So, the railway stocks have had this run because when they were floated through IPOs, there was a phase where the government just wanted to go ahead with their divestment targets. It was never to realize significant value, and nobody understood in that sense. Railways has always been around, work has always been around, but now what's happened is that the PSU railway stocks will lead the charge. And the likes of IRCON and RITES and all of them will start doing it. They've already been doing it. I know for sure that IRCON is actually building capabilities to be a global player, at least in the Asian subcontinent with smaller countries in and around India. So that itself is going to be a big change, and I think they've geared themselves up. It might take time. Of course, it's not something. It's a blueprint that will start rolling out. But what it tells you is that there is visibility. So I would look at this as a second lease of life to railway stocks. Look at them positive.
Okay, Prakash, thanks a lot for joining in. So, we'll move on, of course, and talk about many more stocks in a bit. But in the meantime, in a CNBC-TV18 exclusive, Sunil Mittal, the chair of the B20 Africa Council, said that the inclusion of the African Union in G20 is a defining moment. He called on world leaders for a reset of Africa's debt and further added that Airtel remains very bullish on the African markets. Take a look.
Today's inclusion of African Union as a permanent member of G20, which today has become one of the most important bodies globally, signals that you cannot leave large continents like Africa behind. Even countries like Zambia, which were having tremendous amount of deposits of copper and were doing reasonably well, have fallen into huge debt traps. Countries which are oil-producing countries like Angola, Gabon and many others are also in huge debt. And this needs a reset. To my mind, a debate must ensue amongst the global leaders how to write off most of these loans once and reset Africa into the next order. By giving large amounts of debt, for example, from China, and then securing long-term supply chains on critical minerals and metals, oil and gas, Africa has been deprived of continuous income that is required to build their own infrastructure, healthcare, education, and infrastructure. Well, we remain very bullish on Africa, African growth. I mean, Africa has been growing for Airtel at 20% every year in constant currency, which is absolutely stunning growth for a company that you can double in about 4 years' time your total revenue. The only problem in Africa has been currency depreciation. So in terms of currency depreciation, it's a matter of great worry. And as the economies of Africa will stabilize, so would the currencies.
Okay, well, that's Sunil Mittal with perspective on what this means for their business in the African continent. Well, there was a fair bit of drama in the options market on Friday. I'll tell you what happened very quickly. So, there was an instance where a trader punched in a market order for buying the 67,000 call option, the sensex call option. This has happened on Friday, the expiry day. Now, the premium for this was quoting at between 4 and 5 rupees. The trader punched in a market order. So, the order got executed all the way up till 209 rupees. So from 4 or 5 rupees, the premium went up to about 209 odd rupees or so. So the order fill happened starting from that where the current market premium was all the way till about 209 odd rupees or so. As a result of which, and this is all from social media, X. So the trader sort of put out a post saying that he suffered a loss of 78 lakhs and he's kind of disputing this trade with the broker. So just a kind of introduction to what really happened. And this has kind of been debated a fair bit, especially on social media since last Friday. We have Rajesh Baheti, Managing Director at Crosseys Capital Services, joining us now. Tejas Kode, the co-founder and CEO at Fires. Fires is the broker where this trade got executed, is also with us. Gentlemen, good morning. Good to have both of you here. Tejas, so you're at the receiving end of a fair bit of criticism, I dare say, on social media. Tell us, is this what happened? Were there any failures, system failures on your part or exchange part, which allowed this to happen? Go on.
Hi, Prashant. Firstly, thanks for having me here. There were absolutely no system failures at Fires or the exchange. Basically, the customer has placed stop-loss market orders instead of placing stop-loss limit orders in the 67,000 call option that expired on Friday. There is really no issue here, as false claims have been raised against us. So there were, and I want to clarify another thing right off the bat, that it was not a fat finger trade either, because the client had placed more than 300 orders to execute that trade. which doesn't qualify as a fat finger trade by definition.
Okay. Okay. By the way, have they reached, has the trader reached out to you guys officially, disputing what has happened?
Well, he hadn't really reached out to us. In fact, we reached out to him and tried to educate the customer about, his error, and seems to be very defiant.
So, Tejas, hi, morning. So, will the I just want to understand this a little better. On this instant particularly, will the trader get a refund or is the trade now settled?
The trade is settled. And it doesn't work like that, Sonia. If all traders start to demand their losses incurred in the markets due to their own fault, the business does not work like that. We are intermediaries. We are not counterparties to the trade. This trade also has counterparties who have benefited from the trade. So it cannot be null.
Okay.
Rajesh?
Yeah. Rajesh, I just want to come to you on this just to understand, in general, how do you see, what is the big learning from this instant? And do you think BSE should now disallow these SLM orders, SLM trades?
So a couple of things I've been thinking over the weekend about this problem. Option prices don't move in a linear manner like the underlying does because of the fact that the delta keeps changing, and option prices can actually go from, say, 4 rupees to 200 or even 2,000 rupees in a day if the underlying changes. So putting artificial limits on option prices is always going to be a problem because that will prevent proper trading in the market. Having said that, a couple of things can be put in place. One is that stop loss orders should not be allowed as a market order. So clearly we've heard Fires today say that these stop loss orders were getting executed at market prices, and if the liquidity then thins out after a certain number, then that order will go and clean out the entire book. So maybe one of the changes that could be done is that the stop loss orders should not be allowed as a market order, but should be a limit order, just as in all algos, we are not allowed to place any market orders. All orders have to be limit orders. The second thing is, if you look at the option theory, you will know that an option can be priced independently, but at any time it should trade somewhere between the previous strike price and the next strike price. Maybe a trade annulment policy where an option trades outside of the bounds of the next strike price and the previous strike price. So previous strike price on the low side and next strike price on the high side, subject to certain maybe 5-10 rupees here or there. If you can have a trade annulment policy, because that clearly would indicate that it's an error, because logically speaking, a 67,000 option should only trade between the 66,900 option and the 67,100 option price. It cannot logically trade above, out of bounds of those two prices. So maybe a trade annulment policy that prevents such kind of happenings can be thought about by the exchanges.
Tejas, the NSE doesn't allow stop-loss market orders, right?
Yeah,
the
it doesn't
does.
allow it. Yes, so they also did allow up until September of 2021. And because a few freak trades had happened on NSE, they decided to come out with a pre-trade risk control framework. And the first move that they made was to disallow stop-loss market orders. They've done a series of things to prevent such incidents from occurring. And you see, the thing is with BSE, it's the F&O segment is new. And liquidity has just coming in the BSE F&O segment. And it's about time. I bet they're working on it as we speak.
Are you in touch with the BSE? So will we see a change from their end?
Yes, we are in touch with BSE. We are required to report this trade to the surveillance department. And I'm very sure that they are working on it.
Rajesh, so if this, some of the changes you suggested, of course, will address future problems as well. But a straightforward thing is to disallow stop-loss market orders, like how the NSE has done. And as Tejas pointed out, the F&O segment in sensex, it's picking up in a very, very big way, but it's still relatively new. So would that have taken care of this particular problem, which we saw on Friday?
Yeah, it would have taken care of the problem for that single piece of order that, if it's a large order and it goes at market, it can clean out the book. But as the gentleman just said that there was a series of 300 orders, and what seems to have happened here is that successive stop-loss orders have triggered off the other stop-loss orders resting in his system and has created a chain effect. So my second suggestion that the option should not be allowed to trade, actually execute a trade outside of the bounds of the previous strike price and the next strike price might even prevent this successive stop loss trigger effect that happens in the market sometimes.
Okay, Tejas, is that your view as well, that there should be at least a nudge, from the BSE that options are illiquid, traders should be careful while trading, something of that sort?
Well, we as brokers are required to publish a risk disclosure, which clearly mentions that approximately 89% of F&O traders lost money for the duration that it was tested for. So the risk disclosures are already there, and the client in question, is not a first-time options trader. He's been there, done that. This seems to have been an error from his side. And anybody who enters the futures and options market should be well aware of the risks before delving in my opinion.
Absolutely. I can't say that enough number of times. Thank you very much, both of you gentlemen, for joining us. Quick chat this morning on this issue, which is, I think, taken up a fair bit of at least attention on social media and otherwise. Tejas and Rajesh, good to speak with both of you here. Anuj is now joining in. He's standing by on the big wall. And Anuj actually highlighted this on Friday as this was happening, I think, in the closing hour or so of trade. Anuj, good morning.
Good morning, Prashant. Yes, it actually did go viral. And we, again, were also talking to the broker. And the issue here is the risk management. At the end of the day, if you make a loss, you got to be aware that while trading in options, there are a lot of risks involved. And the BSE's options market, of course, is picking up now. I'm sure that, there would be checks and balances which will be kept now. But anyway, coming to today's trade, I think the point is that the market is now expanding. And forget about 20,000. I think now even 21,000 is possible. Nifty is now less than 1% from 20,000. So that should happen. And the reason for that is the Bank Nifty. The Bank Nifty is showing signs of fresh expansion. And it's possible that it leads the next round of rally. While the broader market is expensive and is overheated, it's not yet in bubble territory, like Nimesh also explained in Editor's Roundtable. The basic strategy has been to stay long and add on every dip. Just coming to the banks, look at what individual banks have done this month. HDFC Bank has shown signs of taking or at least negating some of the underperformance. It's up 3.5% this month. SBI is up 4% this month. Even Kotak has started to pick up. It's only ICICI Bank and Axis which are resting a bit. I think they need to pick up to help Bank Nifty. Coming to today's levels to watch on the Nifty, the first resistance is 19,850 to 19,950, and the bigger resistance is 19,950 to 20,000, the previous all-time high zone. On the lower side, the support is 19,727, Friday's low, and options base is 19,580. On the Bank Nifty, the first resistance is 45,383, which is Friday's high, and the bigger resistance is 45,600, which is the options base. If you start to cross that, I think the countdown to new high will begin on the Bank Nifty as well. So let's see. But my basic premise is that the Bank Nifty from here on leads the Nifty.
Okay, all right. Thanks a lot for that, Anuj. For the time being, though, we'll slip into a short break. You come back, we'll have Mitesh Thakur and Sudarshan Sukhani who will be joining in for their technical trades. You stay with us.
Okay, welcome back. We got, 6 minutes to go for the pre-open session. We have Mitesh and Sudarshan joining us now to tell us how they are positioned, or rather positioning this morning. Gentlemen, good morning. Mitesh, to you first. How are things looking? And, we were saying earlier that at least for the broader market, the pace of gains has picked up. It's become quite large, 4% weekly gains for mid and small caps. Will we see some acceleration pick up in the Nifty and Bank Nifty as well?
Morning, Prashant. I think that seems to be the case. Last 3 days, we've had buy calls on Bank Nifty as well, and I think, it's done well. I think the Bank Nifty now needs to start getting past 45,450. The high, I think, on Friday was close to about 45,380 or thereabouts. And 45,450 is an historical gap. I think once that is captured, 45,700, 46,000 are the two targets on the upside. So the traction is clearly on the positive side on an immediate basis. The mid caps could maybe consolidate a bit, similar as the case with small caps. But I think the larger index would be trending on the upside. That's a fair and a strong chance. And while today SGX is on the upside, I think you wait for intraday dips if you want to buy a fresh, and that's the way I'll approach the market. So on the Nifty, looking at 19,950, 20,000 as the target. On the Bank Nifty, once we cross 45,450, then I'll play for targets of around 45,700 or even 46,000.
All right, Sudarshan Sukhani is also with us. Sudarshan, this market is moving from strength to strength, and it's just a matter of time, I guess, before that 20,000 mark is hit yet again. But how do you approach it both on the index as well as sectorally? Do you now prefer banks over IT because of the, improvement we've seen in the last couple of days?
Yeah, good morning. See, the Nifty gave us a buy signal on Thursday when it crossed 19,600, and that signal continues. So the trade is to be long in the Nifty or to buy it on minor dips with a stop under 19,600, which now becomes support. That's the Nifty. The Bank Nifty suddenly outperformed. It's not just outperforming, it's also confirmed a fairly bullish pattern. So the Bank Nifty is a buying opportunity, stop under 44,500 approximately. And yes, because it has just started a bullish pattern, so there is probably much more steam ahead as compared to IT. So it's worthwhile focusing on banks now and leave IT alone for some time as they consolidate.
Okay, let's take a quick break. We have many more stocks to discuss. We'll do that on the other side of the break. We will also have the pre-opening rates kicking in, and Digant Haria, the co-founder at GreenEdge Wealth Services, will be with us to discuss the stellar performance by Power Finance Corporation and REC. Stay tuned. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio, and we have a lot of stock ideas for you lined up. So let's get our guests very quickly. Mitesh Thakkar and Sudarshan Sukhani are with us. Sudarshan, let me begin with you. What are the stocks on your list this morning?
Sonia, there are a lot of stocks which are giving buying signals. Now, whether they work out or not, the short side is very limited. So I'm looking only at the buys because the patterns are only there on the long side. Bharat Forge is a buying opportunity. The stock had a relentless uptrend. It's paused for a few days. I think this pause should lead it to another high. 1,090 is a stop loss. HDFC AMC is in a trading range for the last 3 months. That's a very attractive place to be in because once a breakout occurs, if it does, we can see a significant rally. So HDFC AMC is a buy with a stop under 24.50. Sun TV, after a rally, again has gone into a consolidation. That's a very classic pattern, rally, consolidation, rally again. Buy Sun TV with a stop under 600. And Tata Motors again has been in a consolidation for more than 6 weeks. Yes, it broke out on Friday, and that tells us that it's probably ready with a lot of momentum on the upside. Buy Tata Motors with a stop under 600.
Okay, all right. Thanks a lot for that, Sudarshan. Mitesh, what about you?
I have Tata Motors on my list as well. 620 is the stop loss and 642, 645 is the target area. But that apart, buy on BPCL with a stop at 355.5 for a target of 375. A buy on Godrej Properties with a stop below 1575. And 1640, 1645 is the short-term target area. And one buy on Shriram Finance, which has been a buy call earlier as well, now can be bought afresh with a stop at 1924 at a target of 2015.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for the 9-10 call as well. But time to focus on a couple of stocks that have done very, very well. That's PFC as well as REC. Digant Haria, co-founder at GreenEdge Wealth Services, joins us to help us analyze both these two stocks as well as the other stocks in the banks and the financial space. Hi, Digant. Good morning. Thanks so much for joining in. Well, both these two stocks have caught everyone's attention. Big re-rating being seen out there. Simple point, how much of the good news is in the price? I'm looking at a brokerage note. They're saying that these guys, they are guarded from any kind of slowdown in retail consumption because they have a focus on the PaaS space. The PaaS sector on the whole is looking much better, so this could be an indirect play. But how much is in the price at these levels?
Thanks, Nigel. Good morning for having me here. And you asked the question, how much is in the price? I think a lot of it is in the price. If you look at last 6 quarters of results given by PFC and REC, there's been absolutely no growth in the net interest income. So whatever growth in the loan book has come has been taken away by the compression in the margins. So the numbers are yet to play out. So right now it's all about the narrative. We've all been discussing that the electricity sector is doing really well because India needs more, conventional as well as renewable, as well as, nuclear, ethanol. A lot of these energy transition themes are playing out together. So there's a lot of excitement that, yes, a lot of growth is going to come in the future and that growth will sustain. It's not just a flash in the pan, but that growth will sustain. So I think if we talk today, the stocks in December are probably at 0.4 times price to book on March 25. They've re-rated to something like 1.1 times price to book. So, the first big move in a sector where narrative is good always happens without numbers. I think the numbers will follow. Numbers will follow in the next 1 or 2 years. But I would say that a lot of it is in the price. We should not be getting carried away. The story is strong. But yes, it does warrant some bit of, caution at this point.
Digant, these stocks are now at morning. They are at about 1-time book, according to a note from DAM Capital. So what should one do if you don't own it? Stay away. Do you have a sort of specific recommendation, actionable, if anything at all?
Prashant, I think we'll talk about what happened in the last cycle. So see, the last good power cycle actually happened between 2009 to 2013. In that cycle, for the first time, we saw that private sector was participating in a very big way, and PFC, REC both got a new avenue for growth. Earlier, they were only lending to the state and the national power companies. They started lending to the private sector. At that point in time, Prashant, the loan book CAGR was 25%. The NIMs expanded from something like 3.5% to 4.5%. So the earnings were growing up by 35-40%. And then stocks re-rated from, say, 1-time book to something like 2.5 times book. And after that, we saw that the private sector massively went in for bad times. Even the government sector or the discoms or the state electricity boards, as we tell them, they went into a lot of stress. And, the PFC, RECs of the world, they de-rated from 2.5 times to 0.3 times. So what I'm trying to tell here is that these stocks are deeply cyclical stocks. They are dependent on one sector and which is largely driven by the government. So, one should not get carried away that they will go back to 2.5 times. They may get carried, they may actually go to, that 2.5 times if there is a lot of liquidity bull market narrative. But we have to understand that today we are talking of a loan book growth potential of next 5 years of 10 to 12% only. Whereas in the last decade when they rallied, we were at a much higher loan growth. And even now the margins are not going to be as high as the last decade. So I think, one must not expect very high returns from here.
So don't get carried away. Don't expect high returns. And in any case, these stocks have rallied, 90%, right, in the last 6 months. So I take your caution on board. The two other issues, and before we wrap up this discussion, wanted your thoughts on them. One is NPA resolution, which has been a problem for the sector on the whole. And the other is the steep losses as far as discoms are concerned, right? On these two elements, have things improved for either of these companies?
Absolutely, Sonia. So for NPA resolutions, a lot, like last 4 years, the GNPAs have, become half from 7% to something like 3.5%. I think that's no longer the issue. We've already seen PSU banks cleaning up their balance sheets. For PFC, REC, that process started last year. It will continue for 1 more year. And then NPAs are far away. I think they are, something 2027-28 is when we can start talking about NPAs. The new cycle has just begun. And that is why there is a lot of excitement on, on these stocks that, now there won't be such a big problem. But because of this excitement, I think there will be a lot of pressure on margins. So if you understand that, the discoms have always had really bad health. But, there is one discom which was always in good health, which was the Gujarat State Electricity Board. They give only 2.5% margins to PFC REC. But someone like a Tamil Nadu Electricity Board who is in problem, they end up paying 4.5% margins to PFC REC. So, as the electricity sector reforms happen, PFC and REC will have to, compress their margins will get compressed over a period of time. So, good news, but bad margins, something like that is what can happen in the future.
All right, Digant, final question before we let you go. Now, IRFC, that one is speeding ahead. Last 5 days, it's up 30%. Now, that's already trading at 1.7, 1.9 times price to book. I mean, how do you view that? I mean, these stocks are still at around 1.1 times odd. So your view on IRFC, and could that be a reason that these stocks get a little higher multiple?
I think so. There is no reason why, if we make those relative comparisons, if IRFC is at 2 times, why would PFC REC not go? I really don't have an answer. They can really go there. But we have to understand that price to book multiples are given to businesses where there is sustainability of that 15% growth and sustainability of 15% plus ROEs. So here we can see 3-4 years of sustainability. Beyond that, it's very difficult. But yeah, it's we are in good times, and who wants to think of 28, 29, 30? We are thinking more about 25, 26. So you cannot rule out a rally, but let's not get carried away that they can trade at multiples of HDFC Bank someday. That's not going to happen.
No, I think in good times is when you should, Digant, in good times is when you should think about these things, right? And sort of keep yourself in check and not get carried away by the moves, as you said. That's some very sane advice. As always, thank you for joining us.
So since we have Digant, maybe just ask him to list out what he really likes from an absolute return perspective from here, Digant.
So in the entire financial space, I think CV financiers are something which are, where the upcycle will be longer this time. Microfinance is something where the upcycle is longer. So, something like a Shriram Finance should actually do well. The stocks are cheap. The ROEs and growth potential is very high. Then, something which is at the intersection of microfinance and CV finance, something like an L&T Finance where there's a new CEO, there's a turnaround possibility, and the underlying sectors have strength. I think these are the stocks which can, really have a fundamental upside as well, just beyond the liquidity-driven rallies.
Okay. By the way, in pure microfinance companies, what is your top pick?
So in pure microfinance companies, see the good ones, Prashant, they've already rallied, like the Credit Access and the Armans of the world are at 4-5 times book. So unfortunately, we have to look lower. Someone like a Bandhan Bank has gone through 4 years of pain. They're talking about turnaround. So a Bandhan Bank or a Spandana who is turning around could be good candidates purely because the cycle is good. I think the good companies are already at 4-5 times. So, we can't really play those. But yeah, I think these turnaround candidates have a fair chance of re-rating and delivering good numbers.
Okay, always a good chat, Digant. Thank you for joining us, and hope to see you more often here on CNBC-TV18. Appreciate it, as always. Now, let's go back to Mitesh and Sudarshan for their 9-10 calls. Gentlemen, morning again. Sudarshan, what do you have?
Tata Motors is a buy with a stop under 600.
Mitesh, what about you?
I'll choose a buy on Godrej Properties with a stop below 1574, targets of 1640.
Okay, thanks a lot for that. Well, let's go across to Ekta now. She has today's Momentumizer stock of the day. Ekta, what are you looking at?
Thanks for that. Well, I am looking at Suntec Realty. It is basically a realty stock. It's part of the BSE 500. The stock did see a spurt on Friday's trading session. It did see a good amount of volume as well as price action. It was up around 7% on Friday's trade. Now, it is a part of the entire realty space, which has really seen a strong run. For example, the realty index is up around 36% on a year-to-date basis. And Suntec Realty has rallied around 48% from its 52-week low. Now, in terms of the Q1 stats, it seemed to be quite strong. strong. Collections 288 crores, pre-sales up 16% to 387 crores. Net debt to equity at 0.09 times. So that has also been manageable. They have upcoming projects in Kalyan as well as Nepean Sea Road. So they seem to be quite bullish in terms of the collection going forward. The stock is around 16% away from its 52-week high, and considering the momentum that we've seen in a lot of these realty stocks, we could probably see further upside on Suntec Realty.
Okay, in fact, a lot of these mid-cap realty stocks have seen big moves. Zomato is the other stock that we're tracking this morning. Equirus has initiated coverage on the stock with a long call, and they have a target price of 135 by December 2024. They like the business of Zomato. They say that they're expecting a compounded sales growth of over 31% from FY23 to FY28. They like the asset-light model of the company. The cash balance is very high at 11,500 crores. And they say that this industry profit pool is going to rise substantially. It is virtually a duopoly with Zomato and Swiggy enjoying the largest share. But this online food delivery market is now poised for a phase of rapid growth. And in that, Zomato's relative market share versus Swiggy has risen to 55% in the second half of the calendar year 2022 versus 47% in 2020. And the adjusted EBITDA as a percentage of the gross order value will reach 6% by FY28 versus break-even that we saw in FY23. So they're very bullish on the stock.
Well, I'm tracking Shyam Metallics. The stock could be under pressure in early trade itself. That's because they've announced an OFS. The total amount of shares that they're looking to sell is around 6.3% approximately, which is around 1.6 crore shares. That's the initial offer plus additional offer out there. The reason that the stock is low is because the OFS is priced at a discount of around 414 rupees, which is a 12% discount in comparison to Friday's close price. In the next two sessions, that's today and tomorrow, retail and non-retail can apply. This will help the promoter bring down its holding from around 88% closer to around the 80% odd mark. They planned a huge capex in terms of steel as well as stainless steel expansion. 6,500 crores. They've spent close to around 900 crores odd. The EBITDA for the past year was close to around 1,500 crores. But brokerage houses like ICICI Securities, they're talking about EBITDA number of around 4,000 crores odd. And that's why they're positive in the longer term. There could be a fair bit of interest coming in for this particular issue. But the reason the stock is under pressure is because the OFS price is at a discount in comparison to Friday's close price.
Okay, Nigel, thanks a lot for that. Well, let's head into the market opening now. We're looking at a strong opening, actually. It's we're just shy of that 20,000 mark, within kissing distance of that level. Up almost about, I think, 60 points in pre-opening, 70 points in pre-opening. And there's the first tick on the index. Very, very strong, 65 points higher now at that 19,880 mark. The sensex as well is up about 170 points. The bank nifty is leading from the front with a gain of around 150 odd points. Let's take a look at the top gainers. It's the Adani Group stocks, Adani Ports, Adani Enterprises that are up 2%. Tata Motors is moving from strength to strength, Hero MotoCorp as well. So autos are doing well. M&M is also your big gainer right now. Followed by Apollo Hospitals. There's a brokerage note over there. So Apollo Hospitals is up in the green. ONGC, Wipro, Power Grid, SBI are a couple of other stocks that are looking pretty good. Reliance is also batting for the bulls this morning. So up almost about 1% over there. What's not doing well? Hardly any stocks actually. Divi's, Infosys, HUL are just flat with a bit of a negative bias. Eicher Motors is flat as well. But really, this is a very strong market. Look at the mid-caps, 300 points straight off the back. The Nifty Pharma Index, the metal index is really surging now, 1% higher on the metal index. So big outperformance compared to the headline index. And, big moves coming into individual stocks as well. I also just want to point out that there are plenty of stocks hitting fresh 52-week highs, even from the frontliners. So we'll talk about that. You have a lot of these stocks, IRB Infra, BHEL, IRFC, RVNL, all at fresh 52-week highs. And of course, Nigel will talk more about that. But otherwise, it's a very, very strong opening.
Well, that's right, Sonia. The stocks we just discussed, REC and PFC, they again said be a little bit cautious. Maybe majority of the good news is in the price. For the time being, both of them have opened higher with a gain of around 2.5%. IRFC, well, it continues its big run. In 5 sessions, the stock is up 40%. Massive move is what we're seeing out there. Railway-related names, IRCON, RVNL, both of them are surging in trade in today's session itself. IRB Infra as well is up close to around 4% approximately. So that is when it's seen a big move. In terms of big volume movers, you have, Coffee Day. I don't know, that stock is down close to around 10% approximately. Big volume in the first minute itself. Not sure whether or not we have a large trade out there. Jyoti Structures as well, just around 11 rupee stock. That as well is down close to around 7%. The only reason we're highlighting is because volumes are massive out there. But otherwise, it's a good-looking screen. The mid-cap index is looking absolutely beautiful, up close to around 0.8%, and a lot of stocks doing well. Even Karnataka Bank is up and about. BHAL continues with its good run. Well, maybe we see a closer to around 20,000 today. That'll be on the bulls' wish list.
Well, we're going to get it, Nigel, right? I mean,
absolutely.
Later, let's just quickly have the Nifty up and take a look at where that is at. So 19,885 is where we are with 60-point uptick this morning. The Nifty Bank will come up as well. So we got to above 45,312. But could not sustain. That's a 61.8% retracement. Hopefully, we get a close above today and things build up. Mid-cap and small-cap indices next. I was saying that how the pace of gains has picked up from 2% a week. We've gone to 4% a week, and 4% we've done for 2 weeks in a row. Right? I mean, that's incredible. And the start, if anything, I think this is perhaps going to continue. 1%, right? I mean, you take that forward to what happens for the rest of the week, you're looking at another 3-4% kind of a week. But too early to say. We're just starting the day, starting the week. But just quite something, the pace in the markets. Krishna Kumar Karva is Managing Director at Emkay Global. He's joining us right now to take some questions. Mr. Karva, good morning. Good to have you with us here. Thank you for your time. Just weigh in there, especially on the mid, small, micro cap part of the market and the pace of gains, etc. The momentum is strong. What's your sort of gut feeling? Is there way more to go? Are you seeing some dissonance out there, or all okay? Go on.
I think the party has been on for the last 3-4 months, and investors are very happy because of the breadth of the market has been very good. So, question is, as you rightly said, that from here where my sense is that still there is a lot more steep to go in individual stocks. I think a lot of catching up, or individual sectors. So a lot of catching up is going on now in terms of sectors which have not performed so far in terms of relative valuations, and that is where you are seeing many sectors catching up. So I think there is the whole breadth of the market being what it is. You will see some rotations which will keep on happening. Plus, there is a lot of feeling of left out also amongst investors. So even if you see some corrections happening, the sense is that at every dip there would be more money coming in from retail investors and also global investors. So there is a FOMO feeling which is very much there. So I don't see any sharp corrections across the market. Individual sector stocks, I think that rotation will keep on happening.
Okay. Mr. Karva, good morning and thanks for joining us on the show. This is a market where some people are calling it euphoric, but a lot of people believe that perhaps there's still a lot more upside in mid-caps and small-caps despite the rally. How are you approaching it from that perspective? Do you think the time has come to churn back into large caps because of the kind of, froth that we're seeing in the mid-cap and small-cap space? And what's the best approach?
See, if you look at the large cap indices, I think almost 60% of the Nifty comprised of basically banks and IT and oil and gas. So there you don't get an opportunity in terms of the breadth of the market. So that's why if you see banks have underperformed, and even IT had its own reasons to kind of being subdued. And you see that Nifty have only given, say, around 10% kind of return year to date versus the breadth of the market as far as the small mid-cap segment is concerned, or the broader market, is phenomenal in terms of the various sector exposure, even the indices which they which track the small and mid-cap indices. So that's plus the opportunity as far as the overall India growth story is concerned. I think the capex cycle, the way it is panning out, and also the opportunity in the renewables, etc., also in terms of defense or in terms of railways. So the whole breadth of the market is that's where the opportunity is in the small and mid-cap segment. And that's why you see the kind of outperformance which is happening. So coming back to a question about rotating back from from small and mid-caps to large caps, I think investors would do well to understand that which segment of the market they are looking to participate in and accordingly participate. Having said that, my sense is that the valuations of most of the banks are very, very reasonable. So to that extent, yes, incremental money could possibly be invested in the whole banking sector where valuations are reasonable, and could be that could be the segment which could deliver superior returns in the medium term.
Will that also be boosted by the RBI's latest move to gradually remove this ICRR and free up a little more capital for banks? That was a recent announcement. Is that a big positive as well?
These are all minor incremental positives. I think you should look at it from the growth itself, the banking sector, the kind of growth that most of the banks are expected to deliver, and also the profitability. So they are in a sweet spot as far as their own capital adequacy, etc., NPS recognition. So they are also having a lot of tailwind. I think the only challenge is that maybe some interest costs are, deposit rates are moving up. So maybe there could be some pressure of NIMs. But if valuations being what they are for most of the banks and the relative underperformance that we are seeing of these banks versus the broad market gives me reason to believe that that could be the space where investors could rotate into.
Hi, good morning, sir. I wanted to ask you about two spaces which looked very promising and there are a lot of tailwinds. But how much is in the price? One is the railways and the other is defense. So these stocks have done very, very well. I don't know whether they're factoring in 2025, 26, 28. I'm not sure what earnings they're factoring in. But these stocks have done well. Your view on the space from here on?
Absolutely. I think the tailwind, no doubt about it, and the returns that many of the companies which belong to that segment have delivered phenomenal returns. Currently, there is a huge momentum as far as the defense companies or the railway companies are concerned. So that momentum in business is no doubt about it. Maybe as far as investors are concerned and valuations are concerned, maybe we have run ahead of the curve. So there could be maybe some consolidation, some price correction. So investors should be very careful about investing in this segment of the market. I'm not saying that the opportunities are not there. I'm only worried. I agree with you that the valuations possibly are discounting, maybe not even FY25, FY26. And typically, my rule of thumb is that if we believe that the best is discounted 3 years forward, then you should take some money off the table.
Okay, all right. On that very sane advice, thanks a lot for joining in, Mr. Karwa. Always great speaking with you. Appreciate your time here on CNBC TV18. Well, that's the word coming in on the market. But let's move on now to one of the stocks that has been a big mover in the last 1 year, Olectra Greentech. The stock has surged more than 140% this year so far. The company in Q1 with its associate EV Trans bagged an e-bus order worth over 10,000 crore rupees for 5,150 buses from the MSRTC. This was the largest single order in the electric bus industry. So basically the surging EV bus orders is something that has got the stock surging as well. We have KV Pradeep, who's the chairman and managing director at Olectra Greentech, who joins us now to talk more about that. Mr. Pradeep, thank you for joining us here on CNBC TV18. If you can just start by telling us what is the current EV bus order book. In Q1, of course, you won that 5,150 crore order, 5,150 bus order from the MSRTC. By when will you execute that? What's the current EV order book? And I think earlier you had given us a guidance of 1,200 buses for FY24. By when will you, roll that out entirely?
Yeah, very good morning, CNBC team. Thank you very much. The first question what you have asked is total how many numbers of buses we have. Yes, about 9,000 buses we have, including this 5,150 numbers, which you have mentioned from MSRTC, number one. Number two, the other question what you are asking is, yes, earlier we have planned for 1,200 buses to deliver in the year FY24. Yes, in accordance to the plans, we are delivering these 1,200 numbers. Apart from that, these numbers, whatever we have bagged, we are going to deliver in coming 24 to 30 months' time.
Okay. So you're saying currently you have 9,000 bus orders. The earlier guidance you had given of 1,200 buses by FY24. You're saying that you will deliver this in the next 24 to 30 months, correct?
Correct.
Okay. You also had a 10,000 bus tender which is in progress, out of which, of course, 5,000 has come from the Maharashtra government. What about the balance tenders? Has it concluded? Is it pending? And can you hope for any order wins in those tenders?
Yes, these 10,000 numbers probably, there are a couple of other tenders which we are expecting. One is the tender which has been floated by Best, that is in Mumbai. That is number one, which is about 2,400 numbers plus 25%. It is 3,000 numbers. And the other tender, probably you might be mentioning that 10,000 numbers is the Prime Minister's e-bus program, which Government of India has announced in the recent past, which is in discussion with various stakeholders by the Ministry of Housing. Probably next month they are going to come up with this 10,000 buses tender. So the first one which I have mentioned, the 3,000 numbers Best, yes, we have submitted our bid and it is in evaluation. We are expecting even that order also.
All right. Good morning, Mr. Pradeep. Nigel on this side, and thanks so much for speaking to us here on CNBC-TV18. It's been a long while since we chatted, so good to have you on the show. Just want to clear out a couple of numbers. Order book doesn't seem to be a problem. Execution is what your street will be looking forward to. So 1,200 buses you will deliver in FY24, is that correct?
Yes, of course, we are planning for it and we deliver. Yes,
got it. All right. So that clears out of the way. Next up, I want to ask you about the realization. What is the rough realization per bus? Because if I'm taking the total revenues that you're reporting as well as the sales numbers, you're getting a varied number around 1.5 crore, 1.5 crore or thereabouts. So what is the average realization per bus? Point number one. And what are the terms of payment? How much do you get upfront? How much of it comes in via incentives at a later date? Explain both this to us.
Yes. See, as far as the first question what you have asked is what the average revenue per bus is, since there are multiple models in this segment, it varies from 1.25 crores to 2.5 crores. So the more numbers a particular model we do, the more of revenues. On average, you can consider 1.5 crores as our bus cost. And we are expecting about 2,000 crores revenues with this bus business.
Okay. And the terms of payments are when you sell a bus say for 1.5 crore on an average, how much you get upfront, how much comes in with a bit of a lag, the incentive component as well. Explain it to us.
Yeah. See, as far as this payment structure is concerned, 20% will be getting as advance and balance numbers in 90 days, 90 to 120 days we will be getting.
So within 90 to 120 days, you get all of the payment?
100% we get. Balance so 80% will be getting.
All right. So in interim, you'll require to borrow some funds, right? Because the payments will remain outstanding. So how does it work then for you all? What is your cost of funds that you're borrowing for those, 90 to 100 days approximately?
Yeah, it is. We have the we have the limits with the banks and we'll be managing with the limits. And also we have some good internal accruals with the organization with which we are managing.
Okay. Mr. Pradeep, hi, good morning. One of the things which some investors I spoke to pointed out was that, could you tell us how much of what you kind of put together as far as these buses are concerned, what's the localization in these buses and how much is imported from China?
Yeah, very good question. Earlier, Nigel was also inquiring about this. See, as far as the import costs are concerned, the battery alone will cost around 40% of the bus cost. And in the remaining 60%, in accordance to the guidance that has been given by the Government of India, we shall have to localize 50%, against which Electra has done 60%. And we are importing battery cells and some of the child parts which are required for the powertrain. Other than that, 60%, 55 to 60% has already been localized, and that localization is a continuous exercise with which the ecosystem, the Indian ecosystem for the e-bus is being developed. In that, Electra is taking a major part to contribute.
Right. Sorry. You said that the rules say 50% has to be local.
Correct. 50% requires to be local mandatory.
50% of the value needs to be local. So
correct.
Out of if the average cost is 1.5 crores, 75 lakhs needs to be local.
Local, correct.
And where are you now? If you take this 1.5 crore
We are
number?
at 60%.
So you're well above the required run rate, right? Got it.
Correct.
What is the what will your capacity go up to, Mr. Pradeep? If you can tell us,
Just let me explain about the capacity. Yes, exactly. Let me explain about this particular capacity improvisation. We have a government of Telangana has allocated 150 acres of land, which we took a couple of years back, and we started the construction of a world-class manufacturing facility in Hyderabad, which is getting executed very fast. And coming by November, December, a part of our infrastructure is getting ready, and we will be shifting to the new facility wherein we can manufacture about 5,000 numbers per annum. That's the program what has been scheduled by us. And very soon, we will be switching over to our new plant. As I mentioned, in the month of December, Jan, we'll be switching over to the new plant.
So for this particular manufacturing facility, what are the kind of funds that you have invested? And the reason I'm asking is because the street is a bit concerned about the delay as far as fundraising is concerned. You know, you've taken that enabling resolution for a QIP. What is the update on that? Why is the fundraising not happening? And can you give us some timeline on it?
Yeah, as far as the fundraise is concerned, yes, you are right. Our board has approved to raise 800 crores, wherein 400 crores, 50% the promoters are ready to invest. And remaining 400s, we are discussing with various investors, and we want to make the best deal, which is in progress. Probably in coming 2-3 months, we will finalize it and we make the financial closure.
So you're saying that financial closure of this fundraising of 800 crores will happen in the next 2 to 3 months. 400 crores will be invested by the promoters. And for the rest, are banks and financial institutions open to funding?
Yes, there are several financial institutions are showing interest to invest in the company. We are exploring the possibility, and the best deal will make in coming 2-3 months' time.
Okay, all right. Mr. Pradeep, since you're going to be expanding capacity, FY24, the street will be saying, okay, 1,200 crores is doable with, I think, close to around 2,000 crores of revenues, 1,200 buses. For FY25 and FY26, what will the execution number look like? It'll have to go up big time because your order book as well as surged up.
Correct. We are planning to double it to 2,500 numbers to 3,000. And that's the plans what we are making. And the next couple of years, we are going to deliver between 2,000 to 500 numbers, 3,000 numbers a year.
2,000, okay, per year. Got that. And also a quick question. You know, buses is good, but I believe you're also looking at getting into PVs, right? A passenger vehicle electric mobility. I mean, that's the talk. Could you tell us whether that will be housed from the listed entity itself or will it be through another entity? Just give us some clarity on that front.
Nigel, it's a very tricky question. As far as this passenger vehicle business is concerned, still it is in, as far as Electra is concerned, probably I may not, I can say that we are not, as of now, we are not into that. But our group company, MEL is making some plans out of it. Probably I may not be the right person to comment on it.
So mostly that will be in the unlisted entity as things stand?
Yes. As of now, it's this time.
Oh.
Okay. So so nothing in the listed entity on the passenger vehicle EV side, right? Just to clarify.
Of course.
Okay. That's important.
As of now, it's this. As of now, it's this stand.
As of now, it's in another entity or it's in MEL.
Yes.
Okay, got it. Can you tell us also, in Q1, your numbers were on the weaker side, and I think you had highlighted that there were some battery norms which had led to lower revenues. Is that something that will continue in Q2 and Q3? And can you tell us, provide a little more color on what the norms are? Will there be any more pressure there?
Yeah, let me just explain about the battery norms in detail. See, Government of India has stipulated a very strong battery norms for the safety of the passengers and for the safe utilization of the lithium-ion batteries. With the stringent norms what have been stipulated, we all have started upgrading our technologies, and the technologies which have got upgraded requires to get tested, and the testing agencies shall have to give the certificate. And unless the certificates are there in hand, none of the OEMs, it is not Electra Green Tech alone, but also to all the OEMs, unless they have the certificates, they will not be able to sell the bus. So, since the norms are very stringent and they are new to the country, it took a lot of time to upgrade the technologies. Along with that, even the testing times were also little high. And almost Q1, Q2, we got, we could not make any manufacturing, we could not do any progress on the manufacturing front. And we paid more attention towards this testing, and we completed the
so will
testing.
it impact
and we are,
further?
now we are.
No, I got that, but will it impact? It won't. Okay.
Okay. All right.
No, the certificates are in place, and now we are ready to move on.
All right. Very quickly, Mr. Pradeep, before we let you go, the first quarter, what was positive was the margins. It came in at high teens. Normally, you have been guiding for, I think, low teens. What is the margin band you should work with for the consolidated entity? That's the buses as well as the insulator business?
Yeah, it should be something like between 10 to 12%.
Got it.
Mr. Pradeep, just a couple of more questions. You did 1,100 odd crores in terms of sales, right, in FY23. Once you move to this new facility, capacity goes up to 5,000 buses per annum, as you said, and then furthermore, say by FY26, right? Could you give us a sense of what kind of revenues? You would have some numbers in mind. What could the overall revenues look like?
No, I think I'm not supposed to talk detail. So probably we, as far as the bus numbers are concerned, we can give that. We are trying to make 3,000 numbers a year for the next 2 years.
So you said capacity would go up to 5,000 buses, right?
Yes, of course. Yes, of course.
Okay, but your delivery, you aim to ramp up bus delivery to 3,000, 2.5 to 3,000 per
year. Here I just would like to add one more thing. Not only buses, we are also manufacturing electric tippers. So that numbers should also be considered. Both bus and tipper, the numbers would be something like between 4,000 to 5,000.
Okay, all right. We'll leave it at that, sir. Thanks a lot for joining us and explaining, the business and the way forward. All the best. While we were speaking with Electra Green Tech, there was a news flow that just came in a while back, and asked my director to pull it up as well. This is, V. Vaidyanathan, the MD and CEO of IDFC First Bank, has joined in, and there is some stake that he sold to GQG. So we'll just pull up. GQG has actually bought 5 crore shares from V. Vaidyanathan. Mr. Vaidyanathan, thanks a lot for joining in. First, if you can just explain the rationale of this sale.
These options were, given to me as by Capital First as the CMD stock options at pretty much at the inception stage of Capital First, and even later at various prices. So these options are close to expiry, and I need to pay 229 crores to the bank for subscribing to these options, and I need to pay 240 crores as income tax. Because the stock is appreciated in value. I've also had some pre-committed social costs of 9.2 crores. So basically, we got sale proceeds of 478.7 crores by sale to GQG, and I have used all of it for these 3 purposes.
All right. Hi, good morning, Mr. Vaidyanathan. Well, you've been speaking about numbers and you've been bang on achieving it. Could you tell us what is your current stake? I mean, post this exercise of option, what is your stake total?
My stake has increased to 1.04%, including what I hold in my direct name, as well as what I'm holding in a social trust.
Mr. Vaidyanathan, how much does GQG in total hold now?
Well, they have to talk for themselves, but to the best of my knowledge, it would be something like about 4.7%.
4.7%. Anything more here we should expect with regards to, or they would stay under 5%, because I think there are rules which say that beyond to go above 5%, you need a nod from the regulator as well, right, Mr. Vaidyanathan?
That's right. That's right.
So they will stay under 5% as you understand it as of now. Or do they have, I mean, is there... Okay.
Okay. Mr. Vaidyanathan, so you said you have a little over 1.04%, right?
That's right. That's
okay.
right, yeah.
And do you have any plans to sell that stake? Yeah.
No question at all. Because as I told you, I want to just make it very clear to everybody, since we are a well-governed company and I owe proper explanation. This sale has been directly reinvested back in the bank.
Correct.
This is very important to note. There is no part of the sale has been used for personal consumption. No
Correct.
part of the sale is for any other purpose of making any other investment. The entire investment has come back into the bank or has been used to paying tax. So as I said number before, I will be paying 229 crores to the bank, as I will be investing it back in the bank as equity.
Yes.
For acquiring the shares, and 240 crores I'll pay tax.
Got it. Warburg still holds about 3% stake, right? Is there any communication from their end?
No communication from their end. I don't know. I don't know the 3 or 4%, something like that. But
Okay, Mr. Vaidyanathan, got it. Mr. Vaidyanathan, business, since we have you on the phone line, looks good. That 25% loan growth in FY24 on track, sir?
All on guidance, and this is the last month of the quarter, so I should be careful. So please don't push me too hard on the numbers. But in the sense, but absolutely, all the numbers we talk about in terms of loan growth, deposit growth, all that absolutely on track. Bank is doing well.
Just one more. I had we kind of picked up on. And this came from NBFC. We spoke with the management of Piramal Finance recently. And they said that in the unsecured segment, there perhaps is some trouble brewing. And that could be months away. I just wanted your thoughts, Mr. Vaidyanathan, on that particular segment, your exposure to it.
Bank is doing... I told you, listen, bank is doing superbly well. You see our asset quality numbers, gross NPA on retail is not even 1.6, net is about 0.6. Really, frankly, fantastic. Credit costs are very low. So we are very cautious. We will continue to be very cautious. Basically, you should remember we do cash flow financing, and this is very important. It's like escrow. And we are conscious of our numbers, and we're doing very well. Nothing to worry about.
Right, absolutely. What is the exposure, though, just to get that number, sir?
I think I've already answered you. I think we should move ahead.
Okay, got that. Well, we'll leave it there then. Mr. Vaidyanathan, good luck. Thank you very much for joining us and joining us on short notice. Sorry?
I thought you called to understand the transaction, which I explained properly now. But first of all, thanks for calling me, so that I had a good chance to explain the whole thing. The rest is there in the stock exchange disclosures. You can always look at it. Yeah.
All right, Mr. Vaidyanathan, thank you. Thank you very much. Appreciate it. Well, that's the management of IDFC First Bank with some perspective. Just under 97 now. Stock's doing very well. It's done very well, up about 1.25% or so. Nigel.
All right. Well, let's move on to the next company. Then PG Electro Blasol. That's in focus. Remember, they raised some money. Also, in August, you had close to 500 crores that were raised by the QIP route. The proceeds will be utilized for funding the working capital returns of the subsidiary. To discuss this and to understand the way ahead as well, we have Mr. Vikas Gupta, the Managing Director, who joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, tell us, the total quantum you've raised is close to 500 crores. Break it up for us. How much of it will be used for working capital, for CAPEX plans? Give us some clarity of that.
Yeah, good morning, Nigel. So we have raised 500 crores, and out of that, almost 238 crores will go into working capital, and almost around 130 crores will go into CAPEX. The balance amount is for general corporate purposes. So this QIP is a very important event. Like the company now has a very strong balance sheet. The net worth has also gone up. And for us, the company is debt-free on net basis as of now.
All right. The other big transaction that took place was Bearing PE. They, offloaded some stake. Do they intend to sell more? And will the promoter entity be interested in lapping up some of the stake?
So Nigel, we know that Bearings has offloaded some stake. So as of now, we don't know the further course of action on the Bearings part. On the promoter side, we are not looking at any kind of activity right now.
Okay.
Mr. Gupta, good morning. You did not participate in the PLI hardware scheme. Are you looking to tie up or kind of enter a joint venture with someone who did? I mean, what can we expect there?
Yeah, Prashant. So basically, just to correct here, we have a TV joint venture where we formed a joint venture with Jaina Group. We announced about that also a couple of months back. So we have already submitted our application under IT PLI 2.0 under a JV company. So we are looking at and evaluating various opportunities going forward.
Okay. So this PLI benefits that you're eligible to get to the tune of almost 200 crores in FY24. Can you tell us when will you start booking that? Will it be in FY24 itself? And what is the kind of incremental revenue contribution that you're looking at?
So the PLI benefits from the white goods PLI scheme will start accruing, and the amount of 200 crores is spread over a period of 5 years. For FY23, we have already achieved the targets in terms of investment and in terms of sales to qualify for the PLI benefit. So we have to still submit our application. So that process is on. Once we submit our application for FY23, we'll accrue those numbers in our financial data.
Okay. All right. Mr. Gupta, I wanted to ask you about how business is shaping up as well. As of now, I think a larger quantum comes in from OEM, but obviously the stock market for business purposes as well, ODM segment is much more attractive. So what is the mix right now? How do you see the mix moving going ahead?
So Nigel, so basically, I'll give you a clarity on that. So for our product business in washing machine, our 100% business is a ODM business. And in case of our air conditioner business, almost around 75% of our business is a ODM business. And in air coolers, almost 50% is ODM and 50% OEM. So when we look at the totality on the product side, in product segment, we are all around 75.
Oopsie.
This ODM category of business.
We missed that. Mr. Gupta, in totality, what is the total ODM contribution as of now? Okay, all right.
Product business.
No, actually, we just missed the number. I think we'll try to reconnect.
So 75 to 80%. Yeah.
As of now is ODM on the product side.
Yeah. Yes.
Okay. 75 to 80% is ODM on the product side. Got that. And is it higher? Is it a higher margin business for you than OEMs? And if yes, how higher can the margins be?
So definitely, as compared to the OEM business, the ODM business.
Okay, I think there's some issue we are having with your audio and video. So, Mr. Gupta, we'll have to sort of try and get back to that. But that's PG Electroplus. By the way, we haven't been able to update you on the markets, which is doing very well. So the Nifty is now just 100 points away from that 20,000 mark. 19,900 has been scaled with ease, 85 points higher, and it's all being led by the Bank Nifty, which is up about 150 points. The Nifty IT, by the way, is also not too far away. The Nifty IT index is up about 0.5%. So all leaders batting for the bulls this morning, and it is turning out to be a bright Monday on Dalal Street. Let's step into a quick break. On the other side of the break, Suvankar Sen, the Chief Executive Officer at Senco Gold and Diamonds, will join in to discuss their business outlook. Stay tuned.
Okay, welcome back. We've got the market, which is doing very well. No problem at all. Let's move on to our next management. Senco Gold is in focus. The jewelry retailer has posted a good set of first quarter numbers. Revenues are up 30% on a year-on-year basis. It's a recent listing as well. Management earlier, of course, said that they are witnessing robust momentum in both footfalls at showrooms and revenues across markets. Remember, Senco is the market leader in jewelry, gold jewelry, in the eastern part of the country. They're a long established player with decades of sort of experience. We have Suvankar Sen, Chief Executive Officer at Senco Gold and Diamonds, now joining us to take some questions. Thank you very much for joining us, Suvankar. Good morning, Prashant here. Could you, I mean, we are entering the festive season, at least here in Maharashtra, with Ganpati festivities around the corner. But could you give us an update in terms of how growth has panned out in Q2 so far? And have you been able to maintain that 30% kind of momentum into Q2 as well?
Usually a much more, a softer quarter. You don't have too many weddings. At the same time, the festive seasons are not really there. People wait for the monsoons to be a good one for the Q2 so that we see the results in Q3. So though we are seeing, growth in Q2 compared to the last Q2 that we had in the last financial year, however, it will not be as robust as the way we saw it in the Q1 with the weddings and Akshaya Tritiya coming in. But at the same time, we are very hopeful that Q3, which is the festive season, the sentiments look quite positive. It is not just us at our company, but overall the industry also is very positive and robust to prepare for a good Q3 so that the consumers, when they will come in to buy for the upcoming wedding season and the annual savings that they do through buying jewelry in the Q3, it looks to be very positive. We are in touch with our customers, we are coordinating with them, and they're all looking forward to coming for the festive season and buying.
Okay, all right. Good morning, Suvankar. Thanks so much for joining in. So given that Q2, they are seeing growth, but maybe not as good as Q1, and second half of the year saying is shaping up well. For the year, what kind of a number are you looking at in terms of revenue growth as well as margins? And also studded, I think, unit had moved to double digits. Where do you see that number headed from here?
So see, in the last 3-4 years, if you've seen our growth, we've been growing at a kind of a 15-20% CAGR, and our endeavor will be to continue that kind of a growth and momentum on an average between 15 to 20% for the whole year, as well as the margins, while the percentage terms in Q1 was under pressure because of the way that, we all want to grow, and the objective of the company and the industry is to acquire new customers. So we are giving offers and schemes and various discounts to our consumers so that the interest to buy jewelry continues to remain. So the margins will be, we don't see too much of a growth in terms of margin. The percentage will be same as we have been seeing in the last year, and a little 0.5% here and there. And growth also, as I said, will be in the range of 15 to 20% compared to last year.
The studded share, you had to give us that number. That's
Studded share, see, yes. So with the gold price rising high, and we saw a pretty good studded share and the growth in diamond jewelry in the last quarter. And I think that continues to remain because the way the fashion, the lifestyle, the need of the consumer is that with their kind of clothing and lifestyle, they would prefer more and more studded jewelry. And the conversion from gold to diamond jewelry is happening quite well. And we also are aware that, there has been a slight pressure internationally on a bigger size diamond, like, 30 pointers, 40, 50, and a little higher. So that benefit of passing on lower diamond pricing to the consumer is happening, and that is also building in interest, and people are looking forward to buying more diamonds.
So what will your studded ratio be? I mean, I think now it's 11%. How much will it go up by over the next 1 to 2 years?
So see, our endeavor that we have set ourselves is to take it to around 13, 14, 15% over a period of time. So step by step, in a sustainable manner, we will keep pushing it by 1.5%. That's the focus and the plan that we have.
Okay, so you look to take your studded sales ratio higher. I'm a fan of studded jewelry, so you have me sold there. But, I wanted to understand, you said 15% top line growth is what you're looking at. But in Q1, your volume growth was in the range of 8% for gold and 34% for diamond. So both on gold and diamond, what will the average volume growth be over the next couple of quarters?
The volume growth is driven. See, when the gold prices go up, what we have seen is that usually the volumes take a hit. It is in value terms that we see the growth becoming higher. So even if you look at the Q2 kind of numbers year on year, we have seen that the volume growth has been in single digits, but the value growth has been in double digits. So similar situation is happening in Q2, and I think that with more and more stores getting added, we will see the volumes coming in from there. From the existing stores, the volume growth will also be marginal because it all depends on the budget of the customer and the availability of liquidity to buy jewelry. So that's how it is. And we expect volume growth, but in lower terms, maybe high single digit or mid single digit, and value growth will be in that 15 to 20%.
So, Suvankar, in terms of sort of store additions, I think as of 31st March, that number was 136. What's the latest every year? How many stores will you add? Will all these be your own, or will these be franchise? And one more question. Sorry,
right.
go on.
No, so in quarter one, we added 6 stores, mixture of own and franchisee. We had more of own stores, 1 franchisee. Quarter two is about to end, so we've added 2 more stores in quarter two. And last 2-3 years, every year we've kept adding 10 to 12 stores with a mixture of own store and franchisee. We would like to take it a little higher with the IPO coming in, with the funds coming in. For the next coming 1 or 2 years, our number of stores that we would like to open would be in the range of 15 to 20 per year, where we'll have about 8-9 own stores and 6-7 franchisees. So that's how we are planning out and trying to go forward.
And these all will be in the state of West Bengal, Suvankar?
No, not at all. See, our focus has always been in Eastern India and Northern India. So West Bengal, there will be 2-3 stores in West Bengal, but it will be spreading over Bihar, UP, Delhi, Bangalore, Pune, so all over. See, out of the, though in our 136 stores that we had about 60 to 70 of them in Bengal, but the rest 50 were spread across 14 Indian states. And we would continue to, pursue the growth in various eastern and northern part of the country. That's our focus area in expansion that we see.
Okay, all right. Give us a few more details, Suvankar. What about online sales as a percentage of your total mix? How much is it? Do you see that number moving up?
No, so online sales is in the range between 1 to 2%. We treat it just like a store. So if kind of a store would have a 30, 40, 50 crore of sale, we see a similar traction with online. Though what is happening is that, as a retail brand, it is our duty to keep uploading the designs and the latest trends that we are coming up with on our online platform. And, people are looking at it. So there is something called a digital driven or digital led sales. So people look at it, they then find out from the store, with the customer care helpline, and then they take a decision either to buy online or come to the store and take it physically.
Okay, all right. Thanks a lot for stopping by and filling us in with all of those details. By the way, the markets are surging up, and we have 2 IPOs that are listing. One is Rishabh, that's on the left of your screen. And on the right of your screen, I think we have Ratnavir as well. So both of them, you should get the initial IPO rates that come up for you on the screen. Rishabh Instruments, more or less flattish. We'll have the management that joins us later today. But Ratnavir Precision Engineering, take a look at that stock. 30% higher as we speak. Guys, I think some of these IPOs, they'll be thanking their stars, the timing they're coming out, right? Bull market, things are looking good. You come in there, take some money off the table, getting a good amount of interest as well. Lucky timing, I think. Good timing.
I mean, if you're in the right industry,
yes, absolutely.
Just take a look at the PG Electroplast stock price, right? Or Sirma or any of these EMS companies.
Yes.
I mean, they're all the recent listings, basically. And the listing is good. But after that, I mean, over the next many months, stocks just up 50, 100%, in some cases much more. So right industry and, of course, a very favorable market backdrop helps quite a bit as well.
20,000, Sonia, mission 20,000 today or tomorrow?
I don't know about that. I hope we get to witness it, right? When we are here on the sea.
What about
it doesn't look like it's too far away. Just 80 points.
What are you betting on?
I mean, how does it matter?
Tomorrow's a better day. We'll see it. I think we'll see it.
Wear a green tie also next time.
Tomorrow's the day. I'm telling you, tomorrow's a good day.
But I think we're virtually at that level, right? Given the way mid-caps have been moving. But in fact, let's pose this question to Mitesh Thakkar. Let's take a quick break. Mitesh will be joining in for some technical trades, so we'll be back in a bit. Welcome back. Well, as we were telling you, we are just within kissing distance of the 20,000 mark and spirits are high. Mitesh Thakkar joins in now to tell us what to expect. Mitesh, just 70 points away from that, psychological mark. But the important part is that now we're starting to see leadership come back in names like, in the banking space. IT has come back in a big way and so much happening in the broader markets as well. Your take on this? What are the stocks to look at for the rest of the day?
I think the breadth has certainly started helping the markets, I think, in the sense that many more sectors are participating than what we saw a couple of weeks back. So I think very clearly the trade calls for us to stay long. I think 20,000 will be cleared soon, if not today, tomorrow. Then I think in this week there's a very strong chance that we'll see fresh highs coming for the markets and the level of 20,000 will be captured. Having said that, the recommendation that I have right now, Adani Ports is something which has come on the radar. So it's moved slightly, but even now can be bought with a stop at 840 for targets of 900. And HDFC Life, disclaimer, that's a recommendation to our clients, so we have vested interest. HDFC Life is a buy with a stop at 655 for targets of 692.
Okay, all right, Mitesh, thanks a lot for that. Well, we've been talking about the equity markets. A good time to turn our attention to the commodity markets. Manisha Gupta joins us to help us out with just that. Morning, Manisha.
Morning, and thank you for that. Well, I'm talking about the metal prices, where it's a different kind of a day. You have copper, aluminum, zinc, so the non-ferrous metals trading on the higher side, but it is the ferrous metals like steel and iron ore which have gone in for some profit taking, and it would be a second straight day for that to happen. On Friday, we saw steel prices decline by 2%. Iron ore also slipped up by a couple of percentage points. That is after China stepped up regulatory oversight on price moves. There has been a meeting on Friday between China regulator and companies and the future derivative markets as well, telling them to ensure that the prices are not speculated much on the higher side here. Remember, China buys 2/3 of the global seaborne iron ore, so it's important to watch out all the information and news coming out from there. Also, when you look at the month of August, the price rise has been quite immense. I mean, it has been an overperformer that we've seen coming from the ferrous metals. On the Dalian, that is a Chinese exchange, we saw the iron ore prices gain up by 14%, and on Singapore as well, 8% of a surge is what we've seen in iron ore. September has started on a positive note as well, and is the reason China is coming out with that advisory. In the sense of imports as well, for the month of August, it has been a near 14% of a jump on a month-on-month basis. So the steel making has been on the higher side. When you look at the steel production in China, that also gained up by 2%, and that's exactly where the demand seems to be coming in from. I also want to show you on what we've done in sense of prices for this current year. When you look at the month of January, we started the year with $117 a ton. We did see a sharp decline to nearly $98 in the month of May, but not before we did touch a high of $134. So we are trading at where we started the year at this point in time. So for the YTD, the iron ore prices seem to be trading quite flat. The market does tell you that it is more likely that the iron ore prices could be moving towards $100 a ton rather than $135 back in the year. The demand is expected to go down. The numbers also seem to be coming in on the weaker side, and that could put pressure on the iron ore prices going forward.
Okay, all right. Thanks very much, Manisha, for that. That's a quick check on what's happening in the commodity space. Well, let's come back to stocks. Praj Industries is surging. Surabhi is here, standing by to tell us why. Surabhi, morning.
Morning. So now India has announced the launch of Global Biofuel Alliance. Now it has urged the G20 nations to join this initiative to take the ethanol blending with petrol globally to 20%. On the back of this, Praj is surging in trade today. Now, India has its own target of ethanol blending of 20% by 2025, and year to date it is it's progressing well. According to JM Financials, the current blending levels are at 11.5%. Now the estimates are that the sugar-based ethanol production capacity is of 8.5 crore litres, grain-based is 3.5 crore litres. So total we have a 12 crore litre capacity which is already in place, which is sufficient to achieve the 15% ethanol blending capacity. Now potential beneficiaries of this ethanol blending program is one of them, the major ones is Praj Industries, because it has 60 to 65% domestic market share in development of ethanol plants. Other than that, all the sugar stocks are also will be in focus because they are also helpful for the ethanol blending program. On back of this, Praj is surging in trade today.
All right, thanks a lot for that. Well, let's slip into a quick break. On the other side, we will talk about the fact that next Monday is a special session of the Parliament. Can there be some market-moving bills after the break? Lata speaks to an eminent journalist and two political analysts on this issue.